What's up, guys? We are going to be starting in about 2 minutes. I am grabbing some water really quick, and then we'll jump right in. So 2 minutes. What is going on, ladies and gentlemen? Today is Monday, another Monday, the 26th, about 1:32 p.m. Eastern Standard Time, and it's been a crazy week since the last we spoke. So today, in today's video, we're going to be basically covering everything that happened last week, and what's we can expect this week. So we'll jump into looking at the prices first. Then we're gonna look over the economic calendar. Not really too much going on until next month, but we'll take a look at that. We'll take a look at the top performing cryptos, how the market's doing overall. Go over some news, the latest news from the past week, which basically went crazy, right? And then we'll end it with a Bitcoin analysis at the end of it and a Q&A. So if you guys have any questions about anything that that you want me to answer, basically about crypto or anything that's covered here, or just anything in general, just drop it in the comments if you're in here on the YouTube live, and I'll answer that towards the end. So let's go ahead and jump right into the price. As you guys can see, let me switch over really quick to, there we go. As you guys can see here, today's Bitcoin's price is, we're pretty much consolidating, right? So Bitcoin's sitting at 30,141 right now. We've gone as low as 29,925. So expected after a massive candle here. We've basically retraced this entire big candle here that we got on Friday, all the way back down. So we've basically collected a lot of that liquidity that got left with that, and now we're just kind of consolidating this range. So this is basically forming. You can see here it formed a big bull flag here. Then we got a big breakout here to the upside, and we had hit a new high. So this is a new high for this year, 31,475. So if we take a look at the rest of the market, let's go ahead and refresh this really quick. We can see that overall today, obviously, everything's kind of either flat or slightly in the red. But if we look at the last 7 days, last week, you can see in the last 7 days, Bitcoin's up 13%, over 13%. Ethereum up over 7%. BNB is down, XRP is down. We have Cardano up over 8%, Doge up over 4%, Tron up over 4%, almost 5%. And you're gonna see this a lot of that basically. Litecoin up over 13% as well. Polkadot up over 14%, almost at 15%. So we've had, you know, some coins are definitely outperforming others. The biggest one here you're going to notice is Bitcoin Cash. In the last 7 days, Bitcoin Cash is up over 100%, guys. Over 100%. That's pretty wild. It was literally under $100 at about over like a little bit over a week ago. It was under $100, up over $200 today. So pretty insane there. Chainlink over 20%. This is one of my favorite projects here that I've spoken about previously. Chainlink, Avalanche, Polkadot. You know, those are some of my favorite projects that are down a lot from the previous from the bear market. And I've spoke a lot about Litecoin as well, with the halving coming up in about 2 months. But because of what's been going on with the overall macro economy, it's kind of been suppressed. It's suppressed its price. But we could potentially still see a run up on Litecoin as we lead up to that halving event. So that's something that we're watching for as well. If we come over here and look at the top performing in the last 7 days, you can see number one, Bitcoin Cash over 100%. And Bybit is finally back in the mix with a 65% run up there. Bitcoin SV up 49%. Radix up over 37%. Conflux up over 30% as well. Near Protocol at 29%. Caspa at 28.5%. So those are some of the top gainers in the last 7 days. Some of the top losers is Trust Wallet down 5%, Rocket Pool down 5%, XRP down 3.7%, Sui down 2.9%. So that's basically what we've seen in the last 7 days. Let's go ahead and take a look at the economic calendar, see what is going on, if there's anything going on, which there really isn't too much this week. The main things that we're going to see this week are going to be on Wednesday and Thursday. Jerome Powell will once again be speaking on those days, just like we saw last week. You know, that always has a possibility to bring in some volatility. So that's why I always mention it. You know, depending on what they speak about, they're going to be, I'm sure they're going to discuss you know, something to do with the upcoming, with the interest rate hikes. Again, he spoke about it last week again, and he said that basically they're expecting for 2 more interest rate hikes coming up soon. So if we pull up over here, this was in the news from last week. So right here, Fed Chair Jerome Powell advocates 2 additional interest rate hikes this year. So that's basically what he kept, you know, saying over and over. They want to make sure to get to their goal of 2% inflation. So until we get there, they're going to continue to increase rates at least an additional 2 times is what is expected at this point. Now, when those 2 additional hikes are going to come in, we don't know when. And as far as interest rate cuts, he said that they're not expecting any this year. Now, I think that they're taking kind of a you know, hawkish stance on purpose, because they don't wanna overheat the market. Because with all this going on, you know, the market's basically been in what feels like a bull rally, right? And I'm talking more specifically about traditional markets. So overall, the last basically month, the market has been pretty much in a bull rally. And now this week we started off in the red, so that's the first time that we've started the week off in a red in probably a few weeks. And I'm sure that the reason that they're taking this hawkish stance is because of that. They don't want the market to just continue going crazy. And if they said that there's going to be rate cuts at the end of this year or beginning of next year, anything like that, market is going to instantly try to price it in. So that's why I feel like even though he said that they don't expect a rate cut for at least 2 years, they could definitely change their mind at that point, because as we already see, inflation is down to 4% right now, and it's expected to get to about 3.6% on the next data release, and from there, by the end of this year, we could potentially be below 3% at that point. So if we get into that 2% range, I don't see why they would, continue to raise interest rates at that point. Also, obviously, these interest rates are really affecting the banks in the U.S. So, and not only in the U.S., but outside the U.S. as well. So there's a lot that affects the banking system and all that, and they're not going to continue to stress out the banking system. So, I think they're taking a hawkish stance at this point, and they could probably change their mind at any point. So let's jump into some news. So the main thing that happened, right, and this is what kind of kicked off things for Bitcoin, and that was BlackRock filing for a spot Bitcoin ETF, right? So that happened not last week, but the week before, on Friday, I think it was, that we got that news on the 15th, June 15th, right? So now last week, this basically started an avalanche, right? So then last week on the 21st, we get this report, right? That $87 billion asset manager WisdomTree files for a spot Bitcoin ETF, right? So that was the second one. Then we get $1.5 trillion asset manager Invesco. They reactivated their spot Bitcoin ETF filing. So they had filed already for a spot Bitcoin ETF. I think it got denied, and they reactivated it, I guess. So that's three of them, right? That have now officially filed for these spot Bitcoin ETFs. Then we got this, right? Dutch Bank applies for a crypto custody license. Dutch Bank is a $1.4 trillion asset manager, and they've now applied for a custody license. Then we also got a French asset manager, CACEIS, I don't know how to pronounce that, KuCoin, I don't know, to offer crypto custody services. So now, and this is a $5 trillion asset manager, right? So now we have a $1.4 trillion asset manager and a $5 trillion asset manager. They're going to be offering crypto custody services. Then we have $9 trillion asset manager BlackRock filing for a spot Bitcoin ETF, $87 billion asset manager WisdomTree filing for a spot ETF, $1.5 trillion asset manager filing for a spot Bitcoin ETF. So there's a lot of money potentially coming into the space, right? We see all the biggest asset managers in the world either filing for the spot Bitcoin ETFs or getting licenses to offer crypto custody. So definitely a lot of banks getting into the mix. A lot of those centralized exchanges. And when we begin speaking about centralized exchanges, then we get this, right? Citadel, Fidelity, and Charles Schwab launch crypto exchange EDX markets. So these are, again, what we just spoke about, we just mentioned, centralized exchanges, centralized banks. This is pretty much one of the initial big centralized bank-backed exchange, right? And these three got together to launch it, which is big because they definitely control a lot of money in the centralized and banking space. So from what I've read, they're only going to be offering a few cryptocurrencies, Bitcoin, Ethereum, Litecoin, and Bitcoin Cash. So I think this kind of goes with what's been spoken about by the SEC, that they don't consider Bitcoin a security. And if Bitcoin's not a security, because it's a proof of work, they also don't consider Bitcoin Cash a security. Litecoin is basically a fork of Bitcoin, so that's not security. We know Bitcoin Cash is a fork of a security. I mean, a fork of Bitcoin. And then Ethereum. Remember, Ethereum, the SEC has never spoken about Ethereum being a security. The only mention of Ethereum that the SEC has ever made a few years back, they said that it was not a security for them. And when asked about Ethereum now, the clown Gary Gensler could not answer it. He could not give an answer on that. So that's why it seems that they're launching with these 4 coins, because they're not expecting these 4 to be securities or for the SEC to go after them, is what I imagine, right? So so definitely interesting things coming out, and this is very, very shortly after the SEC aggressively went after they went after Binance, the biggest crypto exchange overall in crypto, right? They went after Binance, then they go after Coinbase, the biggest exchange in the US, and then they also go after a bunch of different tokens, calling them securities. And then all of a sudden, boom, we have a centralized exchange being getting launched by 3 different banks together. So you kind of see what's going on. It's kind of being made obvious what's going on. What the SEC with banks are doing. They're launching this this attack on crypto, and it looks like it's to try to get as much leverage as possible on crypto. So BlackRock, the biggest $9 trillion asset manager, a week after those lawsuits, they filed for a spot Bitcoin ETF. Remember, there's no spot Bitcoin ETFs. They have never been approved. They've always been rejected. But now all of a sudden, BlackRock, who has a 99.8% success rate when applying for ETFs, now they apply for it. And then you have 2 other billion and trillion dollar asset managers also applying for it after they saw BlackRock. So I think the expectation is that it's going to get approved. And that's going to be definitely going to bring a lot of money into the markets. Now, the SEC hasn't approved this yet, right? But what they did approve, let me pull it up here on the screen. The SEC on Friday approves first leveraged Bitcoin futures ETF. So this was somewhat some big news, because it's just weird, right? They've been attacking crypto for like the last month, and then out of nowhere, now the SEC is approving the first leveraged Bitcoin futures ETF, right? So so they approved it for, who was it? Volatility Shares is going to now be offering the first ETF of its kind to be available in the United States, and it's set to begin trading on Tuesday. So that's tomorrow, right? And this is going to be, I believe it's a 2X ETF. Let me see if it mentions it here. Yeah, so the filing confirms that the 2X Bitcoin futures ETF is set to begin operations on June 26th. So that's tomorrow. Well, that's today. Yeah, so I guess today at night when what day's today? I'm lost because it said on Tuesday. Now it's saying on the 26th, but today's Monday. So maybe after the market closes today. So maybe tomorrow's like the first official day for it to start rolling out. Moreover, the filing stated that the ETF could correlate with the CME Bitcoin Futures Daily Row Index. So definitely very interesting, right? The SEC approves a Bitcoin futures ETF, a leveraged Bitcoin futures ETF, which is way riskier than just trading Bitcoin futures on its own, right? So that was a big thing on Friday that came out. Now, other than that, like we said, on Wednesday and Thursday last week, Jerome Powell was testifying. And one of the things that he mentioned was that they see stablecoins as a form of money. Right? So they were speaking, they said they see it as a form of money. And also another thing that they saw, another thing that he spoke about in that testimony. Let me see if I can find it here. Well, I know I have this one here. I have this page pulled up where Powell also said that crypto appears to have staying power as an asset class in the U.S. So that was another thing that was mentioned when, being asked about cryptocurrencies and all that. So definitely that was some bullish news that came out of that testimony. Obviously, we already spoke about that. He also mentioned that 2 additional interest rate hikes are expected this year. And then also on Friday, I believe it was, we got this news from the IMF, the International Monetary Fund, right? So the IMF, they've always been, pretty public about their stance against cryptocurrencies. And, they came out with this statement the other day on Friday saying that banning crypto might not be the best approach. So that was the statement that they said. The IMF says countries banning crypto may not be effective in the long run. So I think the exact quote was, while a few countries have completely banned crypto assets given their risk, this approach may not be effective in the long run. That was the exact quote that they spoke about there. So that was definitely very interesting there to see that. And they also said, the IMF also said that they initiated development of a global digital currency platform. So I'm guessing this has to do with the CBDCs. But that's one of the things that came out in that report. So, just something else to kind of keep an eye on there. In other news, presidential candidate RFK Jr. will support Bitcoin policies. So, if we've spoken about this already. Robert F. Kennedy, I think he was at the Bitcoin conference. He actually spoke there, and he's been very openly bullish about Bitcoin and supportive of the cryptocurrency. So he once again went on to say that that they have policies that support Bitcoin and the freedom to transact. So they spoke a lot about that, and he's been kind of going on and on about that, right? Another thing is Crypto.com receives registration of VASP registration in Spain. This also came out on Friday, and this again goes with the narrative that we've kind of been speaking about, that U.S. companies are looking to leave, are looking to get licenses and open up overseas, right? Because the SEC has been so aggressive towards crypto with zero regulation. There's zero rules to follow, basically. So there's no clarity in the market in the U.S. right now. So because of that, companies are leaving the U.S. Companies in the U.S. are going basically overseas, getting licenses overseas, opening up shops overseas. And the more aggressive that the U.S. and the less, and if we don't provide clarity, if the U.S. does not provide clarity, the SEC, then this is something that could drive all U.S. companies out of the U.S. And I think the U.S. would basically fall behind in that aspect. And And then the final things here that we saw, Belgium orders Binance to cease crypto services in the country. So we've already seen Binance leave a few different countries. And now Binance is basically the latest one. Belgium is the latest one trying to get Binance out of the country. So, and the final thing that we got today, this is actually from today, the HSBC enables Bitcoin Ethereum ETF trading in Hong Kong. So that's Hong Kong's largest bank, HSBC. They're going to be offering Bitcoin and Ethereum to its customers. So a lot of stuff that's been very, very bullish for crypto over the last week, right? There's just been so much news, and it's weird the way that the timing has played out, right? So now let's go ahead and jump into some into an analysis here. I'm gonna go over how things been playing out, what I'm looking at, and what we could potentially expect going forward. Don't forget, guys, after this I'm going to do a Q&A. So if you guys have any questions that you want answered, whether it has to do with anything I've already covered, anything I've already covered in this live stream, if there's anything, with altcoins and anything overall in crypto, drop it in the comments if you're watching us live, and I'll try to get to those answers, get to those questions with an answer if, of course, I have an answer. I do have some questions from Instagram that I'll be taking a look at. So hopefully it's still there. So I'll be pulling these questions up as well. I got a bunch of questions here from IG. But if there's any other questions that you guys have while you're tuning in live, drop it in the comments, and I'll be try to get to it if I have an answer for it. So let's go ahead and dive into the charts here. So right now, Bitcoin's still sitting at the same price, 30,114-ish. And we can see that it's been kind of, consolidating in this range ever since the big move on Friday, right? So let's start off with the weekly candles here, the weekly chart, so we can kind of have an overview of what's going on. I'm actually going to the monthly chart to really get this overview. Let me kind of clear some of these things off the chart really quickly. All right. So right now, on the month, we're up about 10%, 10.5%. And this would be probably the biggest month since March, right? So March, we had a 23% move. In January, we had the biggest move, which was almost 40%. So last month, we were down about 7%. And this month, so far, we're up 10.5%. So that's where we're at on the monthly scale. Now, obviously, we have how many? 1, 2, 3, 4, 5. 5 more days left in the month, right? So we're not out in the clear yet, but that's pretty much where we're at right now. Now let's go into the weekly. As you can see, last week was the biggest month again we've had since March, right? We went up. Bitcoin's price went up over 15%, and we broke out of that. You can see on this weekly, we had like this bullish flag. Not only did we have kind of like a bear flag type of thing, but we had a falling wedge, right? And a falling wedge, as we all know, is a bullish reversal pattern where, once you break out of it, then basically the way that you measure the target is you measure from the bottom to the top, right? From the bottom of the wedge to the top of the wedge. That gives you an idea of where the target is, and we basically hit that target. So that's basically what we saw here. And then now currently we're back into this big resistance range. If we look back in history at this price range, we can see why this is a big resistance range. So we can see over here, this acted as a big support back in 2021. Again, back in 2021, when we dropped down, it acted as a huge support there. And then a third time right here, you can see back last year in May, when we landed here, it acted as a big support until we lost it. Once we lost the support, you can see that we had a massive crash all the way down to $18,000. So now we're at the same spot right now. So I mean, this is now the second time. So now we saw in April we tested this level, the same resistance level, and we got rejected. That's when we set up this falling wedge, broke out of it, and now we're back at that exact same resistance level. So this is gonna be basically 1, 2, 3, 4, 5. This is the fifth time that we're on the same level. This is the second time that we're testing it as a resistance level. So if we were to get rejected again here and drop back down, back to like $27,000, $28,000, $25,000 range, if we were to drop back down, it would kind of set up this basically like a potential double top here. So we don't really want to see that, right? So a double top is, again, a bearish reversal pattern. So we're looking for a break here to the upside. If we do break from this resistance to the upside, now that next big resistance level is not going to be until this yellow line or this green box range, right? So again, looking back in history, we're looking for areas of interest, right? Areas of open interest. And you can see very clearly here, this is an area of open interest. So just like I showed you here, let me get rid of these drawings. Hold on 1 second. There we go. We can see a bunch of resistance in this range, right? We saw this range act as a big resistance back in 2021, January 2021, and it took about a month before we were able to break above it. So obviously a big area of interest. Then again, in May of 2021, that same spot that acted as resistance, it acted as a support, as a big support. So then back again in January 2022, we tested the same level again, right? Acted as a big support, and then it was able to bounce there before finally losing it in May of 2022. So once we lost it, look at this drop, right? The price completely crashed at that point. Similarly to when we lost this support here. When we lost this support, we crashed all the way down to this next big level. So it's like a magnet, right? So we saw it again up here. When we lost this support, we crashed down to this level. That was like a magnet. So I'm looking for kind of a similar thing here. Now to the upside, right? Where if we break above this level where we're currently at, which is at between $30,000 to $31,000, $32,000, with a break above this range, I'm seeing a magnet up to this range up here. This range is between $35,000 to $38,000 is what I would call it, what I would call this next level, right? This next range. So that's kind of what I'm looking for now. And again, it doesn't mean it's going to happen this week or next week or the week after that. If we look back here, when we fell below this level, you'll see that it took 1, 2, 3, 4, 5 weeks before it actually was able to break through the level. At that point, it was a support. If we see over here, when we broke above this level, although we broke above it really quickly, you can see that once we broke above it, we had a magnet straight to that next level. But we retested this level 3 times. So that was actually 4 times. 4 weeks in a row of retesting this level that we're currently at now before we were able to continue higher. So that's kind of what I'm looking at. Now, we've already had a big rejection, and now we're testing it again. So I'm looking for, some breaks to the upside here. where we get to this next major level, which is again is going to act as a magnet. Once we can clear this level, this next range up here, $35,000 to $38,000, is going to be a magnet, and we're basically moving. I believe we would move straight up to that level at that point. If we pull up the volume shelves, they kind of show the same story. So looking at the volume shelves, you'll see there's not a lot of volume shelves here acting as resistance. And we can pretty much, if we break above this current level, we have a pretty easy way to 34,000 all the way up to that big volume shelf resistance level is going to be sitting between $38,000 to $40,000. So you can see that that's the biggest one, right? When we look at it, we see a big red line here. That's going to be the biggest volume shelf that's going to play as far as resistance in this range. Now, if we zoom out a bit more, we'll see a few different levels. But it gives you an idea of the overall, what we're looking at overall, right? You can see that now with a break above this $30,000 area, volume and open interest is going to increase, right? All the way up to, is going to peak out around $38,000. So I'm expecting that to be a big resistance there. And then after that is going to basically gap off, like is gonna fall off all the way until about $45,000 to $50,000 is when it really picks up again. So if once we break that $38,000 area, $40,000 area, the price will pretty much be able to run up to like $45,000 to $50,000 at that point, pretty easily without too much resistance. But you know, we're getting a little ahead of ourselves. But I just kind of want to give you an overall outlook and idea of, you know, what it is that I'm looking at. But you can see it right now with the volume shelves. There is a lot of volume shelves over here. But the main one is going to be this target up here. So that's pretty much what I'm looking for. I'm looking for a break and a move up. So there's going to, of course, be consolidation. You know, we're not going to get another 15% week back to back. Like, it's possible, but it doesn't happen very often, right? Last time in January, we got a 21% move, and the week after that, we got an 8% move, right? Week after that, a 4% move. So every week, it kind of slowed off a little bit, and then we got a 2-week correction before another 11.5% move, then a 3-week correction, and then we got a 26% move in March. So that's kind of, you know, that's the most bullish case where that I would say, right? What we saw in January. So I'm not expecting another huge move here this week. I think this week we potentially just kind of consolidate in this range. And then, you know, depending on bullish news, anything else that comes out, you know, it could obviously change all of this, right? But as of right now, with nothing big on the economic calendar, without any news, I don't think we should expect a big impulse move in either direction. I think it's more likely that we just kind of bounce around in a range for now. So if we go over to the daily, we can kind of see, you know, a potential range here where, you know, $29,000 could play as the bottom of this range, with the top of this range being $31,000. So that's a $2,000 range where price can just kind of bounce in, you know, trade within and consolidate before we get that next move up. And you can see right now we're kind of starting to build up this bull flag. As you guys already know, a bull flag is a continuation pattern, right? It's a consolidation before continuation to the upside. So usually when a trend is bullish, it has a pretty high success rate. So that's pretty much what we're watching here for this week, really. I'm expecting, you know, anywhere in this range is where the price can go. I wouldn't be surprised if we get a consolidation and a correction back down to 29,000. into that range. We've already tested 29,000 a couple times here. Well, more 30,000 is what we've been testing. I wouldn't count out a correction all the way down to 29,000, right? Now, I'm hoping that if we do retest that 29,000, at the bottom of that $29,000 range, that we're able to hold there and, you know, get that bounce back up to the top of this range. But we'll have to see what happens there. So that's pretty much what I'm watching here. Now, as far as how I'll be looking to play it here this week. So right now, you have a decent play here. I wouldn't mind trying to take a shot here at $30,000 at a long entry. I'm actually in that right now. I have a long entry at $30,000. A stop loss is going to be set below this recent low, so that's 29,925. Now that's a very tight stop loss. If you just want to kind of, you know, if your risk tolerance is not too high, you just kind of want to take like a big position type of thing with a tight stop, you can kind of do that there, because you'll stop out if we clear that low. But it is likely that we will at some point clear that low. So if you have higher risk tolerance, or you just want to use a smaller position size with a little bit more space, give yourself a little bit more space, I'll probably be setting my stop loss either around that 750 area, which is going to be below this candle. Where's the low of this candle? So the low of this candle is at 805. So I would at least want a stop loss below that candle. Or if you want to take, you know, take on a little bit more risk, or just kind of, you know, use smaller size with a wider stop, then this is another option here. This candle here, you can set your stop below that low, right? That low is at 29,511. So the stop loss would have to be at 29,500 below that, I would say. So those are the options here if you want to take this long here at 30,000. You know, now for your targets is going to depend where you're setting your stops, right? You want at least for your first target a 1-to-1 risk to reward. So I would say if you're keeping it tight with a entry here at 30,000, let's say you enter at 30,050, right? And your risk is about 125, then you could do 125 for your first target, the first spot to take profit. So if you're at 3050, that'll be 3175 will be your first TP, right? Your first take profit, which I think we can definitely hit. If we look at here at the 4 hour, we've hit 31 multiple times over that time span. So that's definitely a pretty easy one to hit. Now, if you're doing a wider one, so around 800, so if you're doing it below your stop below this candle, then you're going to be taking probably like a $250 risk, $200 to $250 risk. It depends, you know, where your entry is. Again, you're going to want the same idea. You want to keep that first take profit spot at a 1-1 risk to reward. And for all of these, I would say take at least 50% profit on that first target. All right. Take at least 50% profit on that first one, and then you can split the other two into 25-25, however you want to do. And once you hit that target, then move your stop loss into profit. That's going to be the safest way to play this. And then finally, if your stop loss, if you're using the wider stop at 500, then once again, you know, keep it that 1-to-1 ratio. So this is probably going to be more of a swing play, and your first target is going to be 3,500. So those are the plays that I would say that you can take there at this moment. If we do retest at 29,000, that bottom of that $29,000 range, again, you could take a long there and kind of play it the same way that we're setting this $30,000 entry, right? You can kind of set it up the same way. And if you're looking for a breakout, so for a breakout right now, I'm not going to be doing 31 again because we've already kind of broke that. It's not a new high anymore. Now, what you can do is set up a breakout entry above the high of the year, right? So now this is a new high of the year, 31,475. You can set up a breakout entry above that level. So I would probably set it at around 31,500, right? I think that's a pretty decent entry if you're looking for that breakout entry. And 32,000 would probably be that next breakout entry. So I would probably set entry up there if you want to kind of play a little bit safer and just play a breakout above 32, because I think that's a major level here for Bitcoin. Let's see, is there anything else I wanted to discuss? So we spoke about the falling wedge. You know, this is a bullish reversal candle. I mean, a bullish reversal pattern that we got here, and now we're forming that continuation pattern, right? A bull flag. And on the bigger time frames, you could also see a lot of different patterns as well. Obviously, we have the inverse head and shoulder that we've broken out of, right? We had a breakout and a retest here. So this was a retest, and now potentially continuation to the upside. Let me see if I have that pattern here. Well, actually, this is another interesting one that I had plotted here on my chart. This is a, what do you call it when you move basically a pattern to the upside where it's going to move 5 times, right? So usually you get the impulse moves up on the 1, 3, and 5, right? And then the corrections are 2 and 4. So right now we're basically following this pattern. We're about to hit that top of that target for that 5th, which is sitting around $35,000. I'm trying to look for another one that I had set up here. Hold on, let me take a look. Looking for, okay, so here's the inverse head and shoulders one, where we had the inverse head and shoulders. We had a breakout above that line, and now this is basically a retest here and continuation up, with that target being at $36,000. So we can see a lot of these patterns are kind of pointing to the same thing, right? Again, here's the pattern. Here's the inverse head and shoulders. Here's the retest. So we can see a retest here of the breakout point, and now continuation to the upside. So that's a very common pattern that we see here with any type of inverse head and shoulders breakout, where it retests the breakout point and then continues up. Again, with the Fibonacci's, if you're looking at Fibonacci, what the next spot is, $36,000 is that next major Fibonacci level. So a lot of things are pointing up to that, basically that same little area up there. And another bullish thing is that we're now officially back above this 200-week moving average. So so definitely a lot of bullish stuff on the charts in the long time frames, as well as the shorter time frames right now. So there's a lot that's going on in the market that's affecting the price outside of just crypto, and then there's a lot that's going on in crypto as well, with a lot of even though the SEC was aggressively attacking, now we have we have the SEC that opened, that approved that Bitcoin leverage ETF, and potentially are going to be approving the BlackRock spot Bitcoin ETF, which is going to be very bullish if that happens. I'm expecting for sure Bitcoin would go up to that target up there if that were to be the case. I'm not sure exactly when that would be expected for a decision on that Bitcoin spot ETF, but I think it's only a matter of time before we hit this next target, that $35,000 to $38,000 range. So yeah, let's see what happens there. Now we're going to jump into some Q&A. So if you guys have any questions about anything that was covered today, anything just happening over on crypto, drop it in the comments and I will go ahead and answer those questions. Let me drink some water because I've been talking nonstop for about an hour now. Ducky Dave, what is going on, my brother? Appreciate you tuning in. He has a question here. So Ducky Dave is asking, are you into any other move or play to earn games since stepping? So no, I'm not currently into any other anything to earn games. The reason why, I've spoken about this a few times, and it's just in play to earn or anything to earn. The economies have not been figured out, and they're all built basically exactly the same, where, you know, in the beginning you can make a lot of money when there's not a lot of people, but once people start making a lot of money and more people start coming in, eventually inflation starts to play a big part, and also people dumping their coins for profit start to become a big part in it. And because of that, eventually they all kind of have that same pattern where they go up and then they just fall off the cliff. And I think during the last run, you know, I was doing a lot of different, you know, X to earn projects, and they basically all fell. They all the same exact thing happened to all of them. And I don't see any change in the way they're structuring their economies right now. StepN is still structured exactly the same way. Of course, when more money coming into the economy, prices will go up, and then eventually do the same thing. They'll fall off a cliff. So I think this bull run, one of the main lessons that I learned was definitely probably not to get involved into any of those, or to, you know, even if I do it just for fun, not to expect much profit from it. You know, of course, you can make profit from it, especially if you get in at the right time. So during a bear market, maybe now is the right time. Who knows? Because once the bull market rolls back around, I'm sure, you know, I'm sure money will flow back into those projects. You know, prices will probably go up and then eventually again fall off a cliff. So now could be a good time to potentially get into, you know, any type of move to earn, learn to earn, whatever it is to earn, play to earn game. And you could potentially ride that wave up, but just make sure that to take those profits when you see those returns getting insane. You know, I definitely learned my lesson in any type of move to earn, play to earn game in the last couple years. So yeah, basically my outlook on that. I'm probably staying away from them for now though. Let's see. So on Instagram, 2 years apart asked, are we going to see another pullback soon? And yeah, like I just spoke about, I think we definitely see a pullback. Not exactly like a massive pullback like we saw recently, but more like a consolidation / correction type of thing, where we can potentially you know, move back from this range. We could potentially retest those $29,000 ranges, right? I'm hoping that we're able to stay above 30,000 and keep our closes above 30,000. But if we do see further downside, it will probably be to around that $29,000 range is what I would expect, because it is a minor resistance. You can see resistance right there, and you can see it was resistance there as well. So remember, resistance becomes support. So I'm expecting this to play as a support range as well. Let me see what other questions. Somebody asked XRP predictions post SEC case. And I think it's pretty simple. I think XRP is going to take off, right? Now, how high can it go? I don't know. That part, I don't know. Let me take a look at I'm trying to see, pull up the chart here. So during the last bull run, I want to see how high XRP went. I think it was to like a high of like $2. Yeah, so it was about $2. If you go further back, its all-time high is at $3.50. Depending when that case would end, if XRP was to win, is how high I think XRP could go. Now, one thing that I would note, without the case, right, without the SEC versus XRP case, I think XRP would have definitely broke this previous all-time high and gone higher. Because of it, it didn't break this previous all-time highs. So I think, you know, depending what happens with the case going into the next bull run, you know, because I it's hard to think of it in the next, I don't know when the case is going to end, so who knows, right? But I think in the next rally, with the case over, we definitely break this previous all-time high, which would be a move of about, let's see, we're kind of sitting there. The all-time high is right around here. It's a move of about 650%. Just if we got to the all-time high, I think we definitely go beyond that. Potentially, maybe let's say $5. Yeah, I would say a 10x is appropriate. I think that's something that's definitely possible to see with the XRP winning against the SEC and going into the next bull run. I think a 10x is definitely in the cards for XRP. Let's see what else we got here. Someone asks if they should wait for 2024 to buy Bitcoin or if they should buy now. This is always a difficult question, and it's one that's very common. And the answer, like, the answer is not like a solid straight answer, because it's the way it is, right? The realities of the situation is we don't know the future. If we can tell you, if I could read the future and I could see in the future that there's going to be a lower price for Bitcoin in 2024, obviously I'd be like, just wait to 2024. But that's not the case. From everything we know, looking back at historical data, is that this year is going to be and is already a green year for Bitcoin, right? Let me see if it tells us here. Right now, Bitcoin year to date is up 82%. So that's already huge, and I think we could go higher, right? I think we could end the year up higher in the 100% range. And I think that this target that we've been talking about at $38,000 is in play for this year. Now, can we go lower? Of course, right? We can definitely 100% retest this bottom range down here. If we got some sort of bad news, right? Maybe retest the lows. Is that likely? Probably not. So my thing is, I would say DCA, dollar cost averaging, is going to be your best friend. That's the best answer I could give you, because we can't tell the future. We don't know if we're going to get lower prices in 2024. But what I do know is that historically speaking, this is going to be a bullish year. Next year is going to be a bullish year. And the year after that is going to be a bullish year. So, you know, I would say dollar cost average is your best, is the best thing that you can probably do. Let me see. Someone asked, is the bear market over yet? I do believe the bear market is over. Yes. As far as in the aspect of, you know, are we going to set a new low? I don't think we're setting new lows in this bear market. I think we've set the bottom for Bitcoin's price, and I think although we could consolidate in maybe the current range or maybe at lower levels in the range that we've been at in the last few months, I don't think we set new lows in Bitcoin. So in that aspect, I do think that the bear market bottom is in and is over. Let me see any other questions here. Somebody asked, in the VIP, do you do other stock securities or just crypto? So yes, I actually just started doing, I started including stock option trades in the Discord VIP group. So if you guys are interested or if you're already in it, you can go to Discord. You could just go to the, I made a new channel called Stock Options, and you'll be able to trade it there. So I just started doing that last week. So stock options is now a new thing that I'm offering in the VIP. Somebody asked, should I take profit now or hold? I have no idea where you entered or how you entered, if you're in spot, if you're trading with the leverage. I don't know. I don't know what your situation is, so I can't answer that. Somebody asked, Bitcoin gap at $20,000. That's actually interesting. There is a Bitcoin gap at $20,000, but there's also a Bitcoin gap at $34,000. So yes, there's a Bitcoin gap at $20,000, but there's also a gap at $34,000. Let's take a look at it right now. Let me pull it up. Here we go. So I actually already have this drawn out because this is something that I was also looking at. Let me make this make more sense. So yes, there is a gap. There's a CME gap at $20,000. There's also a CME gap up here between $34,000 to $36,000. At this point, it looks like we're going up for that fill at 36,000, and which is interesting because again, that's that same spot that we've been talking about for our next target, right? $36,000. So now that's some more confluence that we could potentially be moving up in that direction. Now, can we fill that gap at $20,000 on this bottom range? We can, but I think at this point it's becoming less likely. And the reason why is because the higher we go, the less likely it is for us to set lower lows. So if we look at this right now, we can see that we had this low, we had a high, we set a high, right? Then we set a lower low. I'm sorry, we set a higher low, we set a higher high. Now we recently just set another higher low and higher high. Even though it's very, very small higher high, but we've set a new higher high. So with this pattern, this is a pattern that started since November 2022. If this pattern continues, then no, we're probably not going to be filling that CME gap at 20,000. We're probably going to be, it's more likely for us to, at this point, to fill the CME gap here at $34,000 to $36,000. So that's pretty much my take on it at this point. From where we are currently, what the structure looks like, and what the most likely outcome, right? Because we're looking for the most likely outcomes, and that's right now, to me, the most likely outcome. All right, so let me see if there's anything else. Or I might just wrap it up because we're already at the hour mark here. I think that's pretty much it. Yeah, that's pretty much it. So, guys, thank you so much for tuning in. We covered a lot of stuff there because there was a lot of stuff going on in the market. We covered all the news. We covered what was going on as far as pricing. We did an analysis on Bitcoin. and we did some Q&A. So hopefully you guys enjoyed it. Thank you guys for tuning in. Thank you for sending in your questions as well. Remember, guys, we're here every Monday at either 1 p.m. or 1:30 p.m. Eastern Standard Time. That's usually those times that we're starting. I'm still trying to get things figured out so that we can get this going on as a kind of pretty much turning this. The idea is to turn this into a podcast, start getting guests to come on and everything, and turn this into a bigger thing. So I think that's the next step for this. But I just want to make sure to continue doing this consistently every single week, once a week, and get it turned into a podcast, and then start bringing in on guests over here as well to make this fun, make it different every single week, and just have a good time, be able to answer a lot of questions and have fun with you guys. So again, thank you guys for tuning in. I will see you guys on the next one next week. And as always, peace and love.